Good evening, everyone. Welcome. It's a pleasure to have you all here for the spring 2019 semester of lifelong learning, and this is the President's Lecture Series, the first one for this semester. So it's a pleasure to see all of you. I'm really excited to introduce our speaker. He is a good friend of my husband, Bill. They grew up together. And the first time I met Charlie was out in Aspen, where he was living in an extended closet. and we actually stayed in this extended closet. It's very cozy. Charlie is a cryptocurrency, blockchain, and technology veteran. He's a CEO of Atlas Blockchain Group, a publicly traded cryptocurrency mining company based in Vancouver, British Columbia. With a dedicated operations facility designed for scalability combined with some of the cheapest electrical power in the world, Atlas is positioned to become one of the premier cryptocurrency mining and technology operations in North America. Along with his 20 years of technology experience, Charlie helped take the first pure-play Bitcoin and blockchain company public in 2014 in North America. As the earliest public crypto company, BTCS leveraged both an operational and holding company strategy, investing in 4 crypto startups: GoCoin, covering payment processing; Coin Outlet, a Bitcoin ATM and distribution network; Gem, a multi-factor authentication wallet; and ExpressCoin, a retail cryptocurrency outlet. In his advocacy role at the first public blockchain company, Charlie became deeply embedded in the early crypto community and was one of the leading advocates in the first ever Bitcoin Awareness Day on Capitol Hill in Washington. He is a founding member and mentor of Accelerate DC, an initiative by the Washington, D.C. Mayor's Office to help incubate and promote startups and entrepreneurship in Washington, D.C. He's also an advisor to several blockchain companies, including LOSI and Build1X. Charlie is a graduate of West Virginia University with his degree in finance. And please welcome Charlie Kiser.
Thank you, Karen. It is, it's great to be back in West Virginia. I grew up in Martinsburg, and I see some familiar faces here. So thank you to Karen and the president and everybody for inviting me here today. That was quite a lengthy kind of intro. You know, today is going to be a bit of a high-level overview of some of the aspects of this innovative technology that's been going on. I hope it's interactive. We're going to do a lot of Q&A towards the end of it. And I'm going to really focus on the elements that the audience and everyone can understand, and they'll be around the actors and players, a little bit of the phases of what's happened, and then where this technology might go. And hopefully we'll have some questions at the end as we get close. So with that, let's see here. Nope, that's not the right one. Can you show me the correct one on that one? Go back on this one. Oh, the keyboard. I'll use the keyboard. That's fine. I can use the keyboard. Let's try that. While we're waiting, I will tell my favorite joke about Bitcoin. And I've heard a lot of jokes about Bitcoin and blockchain and other currencies. Imagine this is in the future, and of course, folks are talking, and two people are talking, and a question comes up about Bitcoin or valuation, and the guy said, "Well, I just bought BMW with Bitcoin." He's like, "That's awesome. Did you buy what kind of?" I'm a car guy. Did you buy a 318 or whatever? He goes, "No, I bought the company with the Bitcoin." So that. All right, let's test this one out. All right, but we'll do a disclaimer first. As a public executive, the opinions expressed in this presentation and on the slides are solely those of the presenter, me, and not necessarily those of Atlas Blockchain Group Incorporated. Atlas does not guarantee the accuracy or reliability of the information provided herein. And as we know, with the changing dates and movement of Bitcoin, it may not be accurate as of today, even though some of the slides are from earlier. So a little bit about me. I'm the CEO of Atlas Blockchain. We're a publicly traded mining company in Canada. I'm the current director and former CEO of a company called Grio, which is actually on the opposite end of the spectrum of this innovative technology, which is government contracting. We're an accounting platform. I was the former chief marketing officer of BTCS. Karen referenced that. That was a company back in 2014 that went public as an e-commerce play and moved into investing in the space. I'm a fintech entrepreneur, and I've been in the startup and tech space for about 20 years. I've worked and supported 2 different In-Q-Tel-backed companies, and so if anybody knows who In-Q-Tel is, it is the venture capital. Here we go. Do you know In-Q-Tel? So In-Q-Tel is the venture capital branch of the CIA. Nobody realizes that our Intel agency has a venture branch. I'm not part of that community. I was the guy that they wanted to go talk to Walmart and JCPenney or whoever else it was about technology that was seen as not part of that. That's how I got my moniker a little bit as the chief reality officer. I'm a mentor with a couple of different organizations. As I said, I grew up in Martinsburg, and I'm a graduate of West Virginia University. So before we get started, I always like to ask, who here, raise your hand if you hold any cryptocurrency. 1, 2, 3. So 3 out of that. So who here has tried to obtain some cryptocurrency and maybe kind of just got lost in the process or didn't read it or couldn't go through it? It's not easy. Has anybody kind of gone through and tried and said, okay, yeah. So what was, you have some. So what was the experience like getting in and making it happen?
Well, I didn't have any problem getting my first
Yeah.
type, but I couldn't get into Ripple. I don't know why.
Well, Ripple's, part of it is that you have to have the only way to get Ripple is to get a little bit of like Ethereum or initially and then kind of go into Ripple. And it's been a little bit of a challenge with Ripple. So Ripple is a coin that is focused on banking and settlement and has a lot of weight behind these banking and settlement systems. And I'll talk about that later. So the experience when you were you a big, okay. And so what was the experience like kind of getting your wallet set up and
It was, I'm comfortable
Okay.
doing it, but it was, I was trying to decide how much to put in.
Yeah.
You know, it was going.
Yeah. Well, so the process of actually obtaining cryptocurrencies is not that easy. It's still kind of the user interface and the way of doing it is, even if you understand the premise behind it, it's still a little clunky to get in and do and get your bank accounts tied up to it. And so that's kind of one of the limiting factors of what that is. So let's kind of dive in. So the concepts I'm going to talk about are blockchain, cryptocurrency, and Bitcoin. And so I want to kind of clarify at the beginning that we had a great discussion kind of at dinner before this. So blockchain itself is a decentralized ledger that's supported by a global network of computers that verify information. So and I'm going to use an analog a little bit later, but we use the table we were eating on there as the platform, and the food and what we were doing was kind of Bitcoin or a cryptocurrency. So cryptocurrency themselves are actually the first use case of the blockchain, which is kind of the foundation distributed ledger. And Bitcoin just happens to be the most popular cryptocurrency just by name and somewhat by valuation. So when you think of talking about these areas, you're really talking about kind of 3 things at the highest level. And that is blockchain is this idea of information that's being secured and validated over time. A cryptocurrency is just a digital asset. You can't hold one of these things. I can't bring some to you and do it. It's like inside of a wallet. It's inside of a digital piece of equipment. And it is using the blockchain. And it might represent value. It might represent an action. It might represent information. And that's part of the unique nature of what these things are starting to do. And finally, Bitcoin itself has just happened to be the first one that started back in a white paper that was written in 2008. And, it was kind of like the, first to market. So from that, I'm going to try to just kind of keep it around those 3. So, and I'm sorry this print is a little bit small, but if you search the web, there are 1,000 different graphs and what you can learn about blockchain and Bitcoin. So what I've got here is just an understanding of, in general, what is the overview of blockchain, and that is that on the left you've got a piece of information, 2 peers are transacting or sending something back and forth, and there are computers that kind of verify and support that. And those computers all agree on kind of a certain set of rules. And in Bitcoin's case, it was a paper that was written back in 2008. These rules really can't be changed, and those transactions can't be changed. And part of the kind of power of this distributed ledger is that you're verifying the same transactions over and over before you kind of go verify something new. It's trustless in the sense that there's not a third party, there's not a government, there's not a fiat currency that these things are tied to. So that's part of the alarming nature to some people, and for others, it's part of the value in it. And then the idea of blockchain. I've always wanted to do a video of like go find some Bitcoins and show a bunch of blocks and chains and something like that to kind of give perspective. But part of the nature of a blockchain system is that you are using a computer to verify something. And over time, you're verifying the first part of it and then some new information. So unlike if you've got your data stored at Target and they're hosting their information on Amazon Web Services or another cloud service, those cloud services are getting paid a fee to host equipment, to make sure the power is there, make sure their data center is running, make sure that that data center is running here, maybe in Canada, in the US, and in other areas, and that you're able to make sure that your data is available and it's secure. In the blockchain, those same things are happening, but it's across a global set of computers that are agreeing to a certain protocol. And if something tries to change in those, all the other computers say, no, this is not an accurate piece of information. And I'll give you a better analog in a minute or two. But I've got some resources at the end and can kind of send some information on that. You'll be able to take a little deeper look at it. But the analog that I'm going to go with is there's actually a current system right now that will help you understand the kind of value and the reasoning and what's going on. And that's our current property and deed system in the US. And I'm going to use that as an analog to understand what happens with blockchain transactions and cryptocurrency transactions. Right now, if you wanted to buy Bitcoin and transact it or send Ether, which is the currency that's associated with Ethereum, you have a wallet and you'd send it back and forth. If you wanted to send me some, that transaction would happen. And whichever network kind of verifies that, which is all the networks, would start by going back and verifying all the transactions that happened all the way back to the beginning of Ethereum, which was a couple of years ago, or Bitcoin, which was back in 2009. And our current deed system is similar, with the exception of the re-verification. Think about it. We have a distributed network of county clerks and courthouses around the U.S. that have property and pieces of paper. God bless my father over in Berkeley County, whose office was right next to the courthouse. And I can remember going into the deed room and smelling the books in there and going in and seeing all the handwriting from George Washington back and forth. And he was photocopying these huge pieces of paper to provide a deed search. You have a public history of transactions that are traced back to the beginning. You know, you go to get your deed, you're going to see that as far back as you can go, that transaction, grantor, grantee, is going to be pretty solid. It's still not, as Bill Rice and I talked about, it's still not guaranteed. You still can have some fraudulent or accidental information, but it's pretty accurate. There's a standard. You have a deed book, you have a number, you have a plat, you've got longitude and latitude, you've got a data format that is similar in a deed system. You've got, as I said, the grantor and grantee, so you've got the sellers and buyers. Even if it's subdivided, you've got that information. There's a fee that's paid, and there's a reward system. So there's value created in kind of storing this information. You either pay a fee to the courthouse, you pay your title insurance company, and the mortgage lender is not going to let you do that unless you provide this security that this transaction is clear and I can own this piece of property. New transactions are added daily. As I said, the title companies and attorneys are providing this kind of authentication and security. So the only thing they're missing is a re-verification. So imagine that the analog that I said when you're using a blockchain or a cryptocurrency system, imagine you call up your attorney, you're like, hey, I'm going to buy a piece of property. Can you help me close next week? And he's like, I'll be happy to do a title search for you. But I'm going to have to verify every transaction that has ever happened in the United States this morning before I can get to yours. And he goes to every courthouse somehow and he verifies every transaction and he says, okay, now that I've verified all those, I can now add yours to that blockchain. I can add yours to the deed system. And then your neighbor calls up and says, well, I'd like to buy a piece of property too. And that guy says, I'm happy to do yours, but I'm going to re-verify everything as soon as I get done with Mr. Kiser's. So every transaction is actually verifying everything from the beginning of the history of these on, and that's part of what's known as the difficulty. So when you have a computer system verifying these transactions, part of the reason that they're using a lot of power and that they're doing a lot of authentication is that they're verifying everything previously with a small piece of information from that that's coded into a hash. And those sequenced transactions are put into a block, which turns into a chain. And that's the kind of the premise behind what that is. So that's my quick analog on comparing it to something that we know. So what was the genesis? Back in 2008, there was a white paper that was kind of written on a forum called Reddit by an anonymous author named Satoshi Nakamoto that proposed this peer-to-peer cash system. And that was the genesis for the Bitcoin cryptocurrency. You can all read it. I've got the link at the end. But interestingly enough, it also coincided, and maybe was released by this author when the banking failure was kind of going through. And so the first recorded transaction of Bitcoin has a hash in it, which is a link to the website that shows this headline from, I think it's the New York Times, the chancellor on the brink of the second bailout for banks. So I think there's a little theory that the author of cryptocurrency in this paper was a bit of a non-supporter of the way that banks were kind of getting bailed out. So anyway, the first BTC, the first 50 were mined back in 2009. So let's talk a little bit about how these things are governed. They're governed by consensus, and that means that the white paper showed and put in place that there would be a fixed limit on the number of Bitcoins, and Bitcoin was actually the reward. So if you are actually getting on the network and following these rules, you actually can get a reward for participating in the system. And there's a fixed number of Bitcoins that will ever be issued. And the pace of when these Bitcoins are issued is also fixed, so that if you'd like to start mining some with your own computer, or in our case, we're using high-powered computers in a data center, it gets more difficult to do this over time. So I'm competing with you and everybody else to solve a cryptographic problem. And cryptographic problems are essentially math equations where you try to come up with the same answer. So when you're doing passwords and things like that, you've got in the reduced terms, and anybody who's an expert here can correct me, but you're really looking at completing a mathematical problem on one side and coming up with an answer, and a mathematical problem on the other side and coming up with an answer. If the answers match, your password opens. And part of that is the theory behind cybersecurity and cryptography and some of the most powerful kind of cryptographers at NSA right now trying to solve other problems. But in the situation with Bitcoin, the concept is what's known as proof of work. And that means that by performing this work at scale, you get rewarded. The opposite of that, or another way of looking at something, is called proof of stake. Proof of stake means instead of having a lot of computing power to solve a problem, you actually own a lot of the asset, which gives you the voting right and the ability to participate. But I'm going to focus on kind of proof of work in this algorithm. And it really, the kind of technology behind this really allows you to compete and earn this Bitcoin reward, which is kind of part of how the white paper was written. And over time, this difficulty to do this just gets harder and harder to do. And that's part of what you're seeing right now. The analogy I used is you've probably seen reports of how much power it takes to run Bitcoin machines. And, it's like the whole country of Denmark. And I use it kind of analog as we're probably not going to be getting to the moon and Mars and everywhere else by, using, liquid fossil fuel propelled jets and rockets for the longest time. But for a while, we're kind of getting off the ground to get started. And that's a little bit of what's happening right now, is that it will get better over time. But in the short term, there is a need in some instances to use this proof of work algorithm, which is pretty intensive from a power perspective. But the ecosystem is growing. And the other analog is that it's a little bit similar to kind of mining gold. The cost of mining gold is really, equal to the relative and marginal cost of getting it out of the ground relative to the price that you can pay. And all the miners that are mining silver or gold pretty much have a solid equation on the price versus their cost to do it. And if the cost in a forecast over 12 months or 6 months gets too high, that mine just shuts down. And we got an economics professor here, so you can ask a little bit about the economics of mining gold. It's similar in cryptocurrencies as well. Let's keep going. I always get asked, why does, so now with that explanation, which is still kind of hard to understand, why does a Bitcoin have value? And simply it's because there is a global demand for this. There are speculators. There's actually utility that they're trying to extract from it, and it potentially may be a store of value. You combine that with the scarcity and it creates value. And it was really the early kind of mathematicians and cryptographers and folks that just basically said, hey, I'll try this out. It's something cool. I think it's interesting. And I'll mine a few Bitcoin. The technology, though, kind of created the marketplace, the ability to have a digital wallet on your phone, the ability to have an exchange, to buy and sell these things, and the ability to have regulators start to try to understand it. But that's a little bit kind of in the background. They're trying to really focus on that. But in that sense, you've got the elements that make a marketplace and give something value. They also could be worth nothing after a while. The whole industry could just go away. And I'm not here to, someone asked if I was going to propose anything. I'm not going to advocate either way. I'm really seeing this as just giving you guys some answers and exposure to it. But it is something that could go away. I believe it will, in some form, support record keeping and voting and health records and things like that, but we're still in the early days of it. But that's my answer to why does it have value? It's like, why does a Pokemon card have value? Because someone will give you something for it, right? If they stop, then it doesn't have value anymore. So this is a picture of what's known as a Gartner hype cycle. Who here has seen a graph like this? You have? Okay. So this is some fun things. So this is like any technology that ever comes down, from the internet to AI to text messaging, or a fax machine. You can apply this to it, which is there's a kind of a technology trigger that happens, and then you got this peak of inflated expectations, the hype that is really kind of going on about I want to put pizza on the Bitcoin, like I'm just going to make a pizza on a blockchain, and then there's down the trough of disillusionment at the bottom, the slope of enlightenment, and then kind of the plateau of productivity. So this has been a pretty well defined graph that a consulting group, advisory group puts on different types of technology. And I couldn't tell you right now where we are with Bitcoin and blockchain and that, but I think we're probably, coming down that peak of inflated expectations if we look at what's happened over the last year. And that is, from 2009 until about now, we had kind of some picks and axes being built. And some foundational stuff done. We had some bad actors in there that gave it some bad names, and we have regulators trying to scratch their head to figure out where we go in. And then by about December of last year, we had Bitcoins and other cryptocurrencies, valued at like $18,000 or $20,000 briefly. And today they're like $3,800 for a Bitcoin. And so my guess would be we're kind of coming back down, and the believers and people that think they might be able to build something with this are starting to be the ones that actually take action, versus speculators and folks that are just in it for whatever the next wave is. But I don't know. But I think this curve can be applied to a lot of the movement of way technology works. So let's give a little perspective, right? A lot of people compare crypto and blockchain to the internet. And so I just kind of pulled up, in 1990, the World Wide Web was created. In 1994, search engines were created. And if you think about it, some of the first use cases for raising money using the internet were that people were going to displace fax machines. Like, the whole value of the internet back in 1995 was that we're just going to replace all the fax machines in the world. So we did the addressable market on total number of fax machines from Xerox and Ricoh, and that was maybe $100 million. So if you give me $3 or $4 million in venture capital, I'm going to build something that's going to replace fax machines. Let's think how limiting that is right now if we look at what crypto and blockchains could be. If we say, well, they're just going to be either a different currency or something else. Now, I can't predict what they're going to be, but I'm just giving some perspective. Another analog is that the internet really did something that was different, and it replaced sharing information that was typically governed by two sovereign governments, right? I write a letter to my cousin in France. I have to pay a fee, which is in the form of a stamp. And I'm trusting two different sovereign governments to not look at that information, but to share it and exchange value and have a protocol so that that physical piece of paper can get from here to Strasbourg. And then that person does the same thing and get it back. And they exchange with their French money to come here to the US so that that piece of mail can come back. And email isn't owned by anybody right now. It's just a protocol that you put on a computer, and you add a couple of different layers of software, and guess what? You can effectively, as long as there's not like an internet firewall or something like that, exchange information with somebody. And the internet changed the way that was, and it disrupted effectively what governments were providing as a service. That's a very watered down version, but I give people kind of perspective on that, and I think we still have yet to reach the full impact of that. So right now I'm going to do three phases. The first one was innovators, dreamers, and anarchists, and that is that when Bitcoin and cryptocurrencies really came on, there was this idea that it was just going to replace government and replace currency, and we were never going to have to pay taxes, and there was this idea of that, and it really kind of caught on. When I was going around to the different forums and conversations, the people that I were meeting were like, we're going to create a country out in the ocean somewhere, and we're going to pay for everything using these digital currencies, and we're not going to have to ever pay taxes and do all this stuff again. And it was so there's a little bit of that kind of feeling that we're distancing our monetary system from a fiat government or a fiat-based monetary system. So the first groups of people were really crypto researchers, kind of dark web actors, math and tech folks. The early businesses that came on were really centered around like e-commerce, maybe creating some sort of new currency and remittances and payments. But as I kind of pointed out, it didn't really catch on as much because it's still difficult to get a wallet and buy some Bitcoin or Ether or something else. It's still not an easy process to do for most people, for the general public. If you're younger and you're used to like Venmo and Square Cash or Cash App, then these things are much easier to do. But for the general public that's exchanging value and doing something, it's still not an easy thing to do. There was also some high-profile hacks and things that brought to light the vulnerability of cryptocurrencies, and one of them was called Mt. Gox, and that brought a lot of awareness as to how hard it is to manage these and that it's not some panacea of security. But the evangelists really focused on kind of like distancing themselves from that, and that was kind of the first phase. We at our first company were we are the first company to trade publicly. We, in an interesting kind of ecosystem, we went after it through e-commerce. So if you had Bitcoins back in 2014 or 13, they were maybe worth $800, $1,000, but you couldn't spend them anywhere. Like, what do you do with these things? So there was one website that accepted payments to be able to do it, and we started our own e-commerce site, but we knew that was a limited business model because as soon as Overstock or Amazon or someone decided to accept cryptocurrency, that we'd be out of business. So we decided to switch gears into something else. But on our first day we went public, we had a $550 million market cap. So, I mean, here I am, this little guy from West Virginia. I had a paper net worth of $67 million for one day. And we were all like, wow, that's crazy. I was like, what is going on? Like, four of us were walking around the bottom of a apartment building that we wrote this kind of, got recruited in by a hedge fund to kind of help this company out. And all of a sudden it's like, this is crazy, And so from there, we kind of moved on into investing in companies. As we said, we invested in a wallet company. We invested in an ATM network. Someone, I think, mentioned there was ATM networks. You could buy Bitcoin up in Hagerstown, Maryland now. And all that kind of was the first wave. And that was, starting out where, as a public company, it was kind of different than just being in a startup. We had regulators calling us left and right from CFTC, CFPB, and everyone. And I can tell some war stories at the end about some things like that. But that's kind of how we got started. And ultimately, we weren't successful. We didn't make any money at it. We did the best that we could. But running a public company is expensive, and it was really difficult to do in that environment, especially once the regulators started coming and saying, hey, you need to have this. We had our bank account shut down. We had a lot of things happen to us back then. And we had a big failure, right? Mt. Gox was the first failure. So Mt. Gox was an exchange that allowed you to trade Bitcoins and other digital currencies. And they lost about 850,000 to 1 million some Bitcoins in the course of a couple of months. And they are still trying to resolve what that's going to look like today. It ended up in the Japanese courts, and bankruptcy attorney and group in Japan has started to kind of try to figure out how to, reacquire some of the Bitcoins. And there's another popular figure who's trying to actually restart this exchange himself with another group of people. And this kind of brings light to the fact that distributed networks and ledgers are not unhackable. There is no technology that you're probably ever going to come across that is unhackable. I'm just going to say, don't expect that this is the panacea or the next thing in 50 years. One of the things that we're struggling with is that there can be bad actors. I have a friend who's a CEO of a very high-powered security company. When I talked to him 2 years ago, I said, "What's your biggest issue right now from security?" And he said, "It's insider threats. Someone that would just open up a drawer." And we mentioned we had City Hospital here a year or two ago, locally, that had an inside actor that got some addresses and did something, right? And so that's really hard to kind of go against. But technology platforms and cloud services and even AI, you're still going to have the fact that these are mostly made by humans, and there's a factor that will be hackable because we're all learning this information. So it will get better and closer, much better than kind of having your data exposed by Target or somewhere else. But we're never going to get to a point where you're completely saying this is absolutely secure. So let's keep going. In 2014, Overstock.com became the first retailer to accept Bitcoin. And what's interesting now is Patrick Byrne, the CEO, is trying to shift the entire company and move it into blockchain and Bitcoin and other digital asset related businesses and shed the e-commerce site. And he's really struggled to do that. But they've gone heavy into it by investing in a fund that will allow people to participate in other types of investments in crypto. And they are pushing forward with the idea of a security token platform. And I'll talk about that later, but that's when instead of owning a share of stock, you're actually going to own a digital token that represents ownership in something. So let's go to phase two, right? That's more like the building blocks of what people are doing. And I kind of talk about like maybe 2014 or 15 until about now. And that is that, you know, there's now the evolution of more robust digital wallets, exchanges, industrial mining, payments networks, banking, and then regulatory platforms that are evolving. We also had the introduction of another blockchain based on something called Ethereum, and that allowed for something called a smart contract and an ERC token, which kind of changed the way that you could raise money, and it changed a little bit of how you could issue a token. These tokens allow you to actually write instructions on it. So imagine escrow right now. If I go to buy a car or something or buy a home, I've got an escrow agent that kind of verifies, a human verifies who I am with my license. They verify what the property is, and they verify that the money is acceptable. They hold it for a while till a couple of these things happen, and then the two parties either get access to the asset or they get their payment for the asset. So imagine money could actually do that for you. You wouldn't need humans to verify other humans. You wouldn't need humans to verify what temperature it is if something is supposed to occur. Imagine the money itself would have rules and inputs that could verify these things. And at the same time, if those rules didn't happen, that money wouldn't be worth anything. So if I said, here's $5,000, but it's only good if this car tests out the way it's supposed to be. And when it tests out, that money will turn good and the key will kind of automatically happen. It's a very kind of watered down version, but the idea of smart contracts is allowing something to happen that's related to the money, and it's related to something, and you can perform an action or you can do something unique with the money or the token that you can't do with a physical dollar or lira or something else. So that really kind of changed the way that people could raise capital and use these digital tokens to do something, and that really led to something called the kind of initial coin offering, and a kind of hype awareness about Bitcoin, and that really happened in 2018. And so the premise behind that is that you could issue money with the digital token and kind of skirt around some SEC laws and some other things like that, and you could put pizza on the blockchain and raise some money for it, and someone in the country or globally would actually give you money, and I'll go a little bit deeper into that. Finally, enterprise blockchain applications are starting to take shape, like IBM and other folks are kind of jumping in to look at that and apply their technology. So first is Pix and Axis, and that's, you gotta have a couple of basic things to participate in this innovation, and that is you have to have a wallet, there ought to be an exchange, and Coinbase is probably the most well-known in the U.S. If you're probably using a wallet or something, you might be using a Coinbase wallet. Edge is another wallet that you can use, but to own a digital currency or a token, you actually have to have something electronic to put it in. So you put it in a digital wallet that you have on your phone or your computer. You also can use kind of cold storage for a device or something that also has keys that are associated with your token if you're unsafe or uncomfortable with a digital wallet. And Binance is a Chinese-based exchange that is one of the largest now, and so is Kraken. Then there's mining, the actual securing of these networks, and there are a couple of companies there. Bitmain is actually the manufacturer of a lot of the hardware that we buy Bitmain servers when we're going out to support our company. Hut8 and BTC.com. BTC.com is one of the largest mining pools. So now they've aggregated a mining pool together, and you can buy into like a fractional share. And then there are new coins that are developing, like Dash, Zcash, Ripple. You asked about getting Ripple, EOS, and these are all newer types of coins that perform different functions or address a certain type of business. So let's keep moving on. So this is the homepage for Coinbase. Coinbase is probably the most common U.S. company. They raised $300 million last October at an $8 billion valuation. So if you think that this is kind of small potatoes, this is an $6 to $8 billion company based on a valuation in October that says all we're doing is allowing you to buy cryptocurrencies We're going to verify your information, what's known as kind of AML KYC. So there's an AML restriction or protocol called anti-money laundering, and KYC, which is know your customer. And all institutions and financial institutions have to kind of adhere to that in the US and in other countries. And so Coinbase is going out trying to find the best way to do those verifications and then allow you to buy tokens. And it's not easy to do. You asked about Ripple. Ripple is a token and coin that is trying to address a specific kind of market segment, and that is banking and settlement. So what Ripple has really tried to create is a framework that allows you to banks to settle and transfer money back and forth. It's almost like SWIFT or the HC, those types of banking rails that are inefficient and expensive. There are tokens like Ripple that are focused on not just initializing themselves, but creating a network that allows you to be auditable and also reduce the friction in those types of transactions. And they just happen to be one of the most popular ones, and probably are, making the most headway at being able to recruit. There's a little competition within the banking and settlement and investment side, but Ripple seems to have some weight. And as you see just today, NASDAQ, might be listing an index to some of these cryptocurrencies, including Ripple, that would really promote it right now. So I talked about Ethereum, which is an open source blockchain project. It's a little bit similar to Bitcoin, but a different type of reward system. And it allows for those smart contracts, leveraging these new things called an ERC20 token. And it really spawned this ICO craze of 2018. And the ICO is another phrase for initial coin offering. So you used to hear about an IPO, initial public offering. We're going to go public and raise some money. In our case, we did a reverse merger, so we didn't go public as an initial offering. We actually raised money because we merged with another one. But the concept around an ICO was that I can raise money by just selling these tokens. I can issue 1 billion tokens, and I'll give you 50,000 for $500. And in 2018, globally, there were just thousands of these ICOs going on, and all the regulators were kind of scratching their heads going, we're not sure what to do about this. I'm an advisor to a company that did an initial coin offering, and it really brought a lot of awareness as to how limited the regulators are with their current laws. And some of the laws really just don't apply to some of the newer technologies. So they're struggling to apply a 1933 kind of securities law to an asset now that's very different. So the outcome of this craze is that the SEC has taken some action on some very direct and fraudulent folks, at least in the U.S., by bringing suits against them, making them return money to investors, and in some cases putting people in jail who are actually directly misrepresenting an action, misrepresenting an investor, misrepresenting something. And I've been at several different SEC committee meetings where you can hear them start to kind of get close to what they want to really put forward, but they're not really clear yet on the best way to regulate this industry. And as I mentioned in our conversation, one of the things that's going to really drive global awareness is which jurisdictions will be friendly. Will it be Switzerland? Will it be Singapore? Will it be Africa? There's a competition, just like in the regulatory environment right now in Washington, D.C. The regulators themselves are kind of battling back and forth between what they want to do and who they want to kind of focus on. So with that, let's kind of keep on moving here. The enterprise applications, here's an example of IBM. So now we're starting to see the big guys are kind of picking off some of the talent, and they're finally saying, okay, maybe it's time for us to jump in. So IBM set up a kind of a pilot program with Walmart to look at supply chain. And in the pharmaceutical industry and in supply chain, the custody of every piece of information or every ingredient is very key and important. So this would be a good example of how to use a blockchain. If I wanted to say every ingredient that was in my drug pill, I could trace it from the source to the maker to the pharmacist to the distributor to the pharmacist into my body. I could have a verification that that pill or that something really was accurate and not tainted or not counterfeit. So, but I think right now I would say that the Fortune 500 companies are still a little skeptical, and it's almost like there's a little bit of trying to fit a technology into something that is just looking for a home. So there's not a lot of business applications where there's a lot of revenue generated yet in using blockchain. And it's just starting to kind of, we're at that phase now where we're starting to kind of look at what will blockchain do for businesses. And what will they do for other types of organizations, nonprofits, or voting records, or health records, or things where maybe there's not a profit motive, but there's just a security and social motive. So last is phase 3, and that's what's really happening right now. So this will kind of wrap up by saying, the real thing that's happening right now is that since we've had this hype cycle that went last year, and now Bitcoin's kind of settled back down, we're seeing a lot of the speculators and folks kind of move out, and the real kind of believers and institutions, even Facebook and Google, are building larger and larger teams of blockchain developers to try and apply that to their technology. And bigger companies are starting to see that there might be some use cases coming on. A few of the trends that are coming on is the idea of both a security token or tokenizing an asset. And so as an example of that, I just pulled this today. Imagine that you could take real estate and put a fractional ownership on it that's not a share of stock, but it's just a digital token. And right now, one of the biggest deals that's happening is that there's a building that's basically being recorded on a blockchain, and you can buy tokens in this transaction. And to be able to bid on this transaction, it's an ex-Wall Street guy. You actually would have to have $10 million in crypto assets already verified to participate in the auction. So just like typical bidders do on large real estate transactions, if you're going to submit your kind of financial statement to say, hey, I can bid on something, you got to show you can close it too. And that's now happening by tokens and security assets, not just cash in the bank. The other piece that I talked about is not tokenizing an asset. Like you can take art. There's a company in Canada that one of our directors has just launched that's going to allow you to tokenize the equity in your house. So imagine that you've got $300K in equity in your house, and you don't want to just do a reverse mortgage to get that. I can tokenize this and sell it. And so you might be able to say any asset that you've got, cryptocurrency may be able to provide a framework and a marketplace to give it value to more people that could obtain it. So we're just creating less friction in the marketplace and more supply and demand, more marketplace people that can own and buy these things. Now the regulators still have to catch up with that, and there's going to be some failures where I'm going to tokenize a car, but guess what? I tokenized it to 3 different people, and where's the title? They'll still have that happen. But the idea that any asset can be tokenized is not out of the question. That's different than security tokens. Sorry about that. Security tokens are just, instead of having a stock share, you've got a security token, and I can actually issue ownership in my company through a digital token and have it regulated. And so you'll see here, and there's a couple of platforms. One of them is Securency. They're based in DC, and you've got one based right here in Shepherdstown, actually. A guy named David Levine, who some of you guys might be familiar with. He has started a company called Indico, which is another platform for issuing security tokens and ownership through a security platform. So the idea here is that instead of having a stock certificate in a clearinghouse in New Jersey that's represented by some sort of ledger that you've got with your broker, you just have a digital token. And even NASDAQ and NYSE and stuff are really looking heavily at this because there's a lot of costs and inefficiencies in how you own and broker the different types of securities for equity. So this really has some kind of some power, and it also has some transactional value as well. So I think the investors are really looking at this. Regulators are trying to adapt it, and we're trying to really look at how do we exchange anything that has value globally. So I would be looking at that as a little bit of a trend. So the same thing is, I tried to start my own seed fund back in, I don't know, when was this? 2012. So the idea that you could own ownership in a startup, like right now, how do you get access to see which startups you could invest in? What would be a way of doing it? There's crowdfunding, which you can look at. There's certain platforms, but you can also use digital tokens versus having what's known as like a convertible note, where you put in $50,000 and that converts to some valuation later on, and it becomes worthless if that company doesn't go anywhere. Well, you might issue a token and have some sort of ownership that's regulated by the SEC or someone else. So this is part of what these security tokens are being able to kind of look into. So finally, where do we go from here? So I think the use cases are really around supply chain, record keeping, the Internet of Things. So you've got devices and things that are actually creating information and creating a lot of data. The shipping industry is using sensors and tracking stuff, and as autonomous information comes through, the storing of those is really important. I think the global instability. Look at Venezuela and others who've seen a huge pickup in interest in obtaining cryptocurrencies in areas like Iran, where they're now having more tightening of their economic sanctions, and you've got the economy of Venezuela just dissolving, right? So you got these high demand areas. So I think there's going to be a test case for cryptocurrency as another asset to offset the global instability, and you got state actors. Putin is looking at creating his own currency, and so is the Maduro in Venezuela is trying to do a petro one to exclude himself from sanctions so that they can receive investment in. So our country is looking at how do we stop that, and the regulators, frankly, worldwide are going to assert their leadership and try to do something. So that's a little bit of the trends that I see going on. I put in here some resources just to get started, right? CoinMarketCap is where you can go look up the value of different cryptocurrencies. CoinDesk is kind of like the main area. If you want to start reading articles, I go to CoinDesk and just start reading some stuff. Cointelegraph is another one that does that. And then there's two associations, both in DC, that are great for information. One of them is the Chamber of Digital Commerce, and the other one is called Coin Center. And I'll put some links for those there. And that'd be a great area to get started. So I'd say thank you right now. Here's my contact information. And hopefully we'll have some questions here. I'll go back into the slides or do whatever you want to do. But there you go. There's a high-level run-through of 10 years worth of crypto in about 30 or 40 minutes. All right, right here.
Okay, Charlie, we really enjoyed this. Thank you
Sure.
so much. Oh, thank you, Karen. So we touched on this just briefly. We didn't have an answer.
Yeah.
Could a university like Shepherd University take advantage of trying to recruit international students using some kind of cryptocurrency? Keeping in mind that we are a state institution.
Mm-hmm.
Right, and so we have all the issues on having to report our records, et cetera.
Yeah.
It just kind of
All
interested
right,
in
so
this
I'll do.
scenario.
Let's answer it two ways. So let's say that your goal is to do two things. You want to enable cryptocurrency to be part of the transaction to pay, or are you also interested in just driving the interest and curriculum around the evolution of this technology? Which pay first? Okay, all right. Well, I think, yeah, pay as you go. Well, I think the idea that as a state institution, I think you're probably going to be limited by regulatory hurdles initially. So, but you certainly can be, there's certainly examples of trying to be a leader in that by pushing. And there are different states. For instance, Wyoming actually is one of the states that started their own blockchain and cryptocurrency focus group called Data, I think data.org or something. And so they are trying to be forward thinking in that. So I would say in West Virginia, it's small enough that you could probably get access to the state regulators and legislature and recruit the idea that, hey, we think this could be a competitive advantage for the state, right? Let's move away from what over time might be a struggling coal industry and move into something that is new that doesn't require, one of the limiting factors of West Virginia is travel, right? I mean, I wrote an article for my cousin Allison and her law firm about the same thing, but I referenced the fact that my grandfather was a coal miner in southern West Virginia and fought back on the coal companies who were paying him in scrip. So if you think about the analog there, we already had an analog for cryptocurrency in the state of West Virginia and others, and that is that you were getting paid by a company issued currency. And if you didn't use that, you couldn't use stuff in the company store. So these people were getting kicked out of their houses, not being able to purchase things if they tried to unionize. So my grandfather was just one of the main guys who unionized and was part of this thing called the Matewan Massacre, and I'll tell that story another day. But that's one way, is to say, okay, now we can, almost like how Virginia was trying to kind of do the same thing with banking to get it back from North Carolina. And that is, how do we drive kind of regulatory awareness that it can be a differentiator? Because in the future, you might not have to travel as much to do work and coding and things like that. So the limits on our highway system and our mountains can be turned into an asset. Yes.
Is anybody out there looking to insure some of these blockchains? Because as you said that,
Yeah.
They're not unhackable, which, makes one wonder, you've got 100,000 in Bitcoin today, and then
Yeah.
somebody hacks the thing and you got nothing tomorrow. So is anybody out there providing an insurance umbrella over any blockchains at this point,
Well,
or
so-
thinking about it, or?
So one of the things I didn't touch on is the idea of a stable coin. The word stable coin means that we're going to create a cryptocurrency, but we're going to peg it to something so that its value, regardless of the supply and demand, kind of stays the same, and will manage the pricing and the units by supply and other areas. So, meaning a stable coin is one way of ensuring that the value, if it goes up or down. Now we can't insure it against zero, right? You know, you could go on kind of Warren Buffett's model where he's using premiums to invest in other things as one way of creating a kind of float model, right? So Buffett's model is I provide insurance, but the premiums I use to invest in other things, and I hope that it's not just my premiums that go down, but that my investments are also profitable enough to offset any losses that I have.
Yeah.
So I don't have a great answer for that, other than I know Buffett's not a big fan of Bitcoin.
And he liked Geico.
Yeah.
And then what about the guy that, this young guy who died mysteriously, 2 or 3 weeks ago, had a, cryptocurrency company, and now
Oh, yeah, that
nobody can
exchange, right,
access-
yeah, okay, so this is a great example. Okay, this is a great example. So there was an exchange that, was it called Quadra CX? I can't remember the name of it. Anybody remembers the name of it? Jump out. But they had, the founder of the company had a laptop that he didn't share his encrypted password with anybody. And when he died, the only way to get to some of those transactions were through his actual laptop computer. So this is still Wild West. Like, as a public company, we have to answer some very strict questions about what we're doing. And fundamentally, I will tell you, right now with Bitcoin down in price, we've actually shifted into cannabis. We're like on a holding pattern on crypto, and we've moved into cannabis for the time being. But there's not a good answer to that other than due diligence. Right? That's part of why regulators want to do something, because there's $180 million in Bitcoin right now in this exchange that his wife just is having to issue statements saying, we're trying, but it's his laptop, and they don't know if they can get it open or not. Isn't that a crazy story? So yeah, so it's still early days that you can have not very good security protocols in place in an exchange. And part of the value, though, is that some of these exchanges are willing to do things at a lower cost or better access or something that a Coinbase or another one that's actually following the letter of the law can't do yet. So, what else?
When you say you're getting into cannabis, are you going to use blockchain to track cannabis transactions? So from the
Sure.
grower to the dispensary to
Sure.
the... that
So
what you
the
mean by
answer
that?
to that is, it's interesting. There actually is, if the Venn diagram of like cannabis, I mean, remember, we're a Canadian company, and cannabis just became legal in Canada this year, so it's just crazy up there. And we invested in an Israeli company actually that is got licensing and has a history of developing cannabis in Israel. So they're going after that market there. But no, we don't currently have plans to develop a platform that would use the blockchain to do a supply chain on cannabis. There are people that are doing that right now. It's a great question. We're not going to do that. We're just going to focus on growing it and taking advantage of the ecosystem that's kind of evolving. And if there is something that, if the prices of Bitcoin and other assets do start to pick up and it becomes economical for us again, then we can look at the industrial mining. But we are a little bit limited right now in that because the prices are not as advantageous as we'd like them to be.
Microphone's coming around.
There we go.
You had voted on one of your slides, but you didn't talk about it.
Yeah.
There's a move to get back to paper ballots all over the country for security of the vote.
Yep.
How does Bitcoin, or I'm sorry, how does blockchain interact with that?
Sure. So there's a company. There's a company called Clearvoter that I'm aware of. That a woman, I think, is Rosa Shores, who also runs a group called Block Spaces in Tampa Bay. And Block Spaces is like an incubator WeWork style place for Florida blockchain and Bitcoin companies. I saw a presentation that she had that she was proposing the idea of using blockchain to verify voter records. And then I saw another larger company that was doing the same thing. So my answer is, it's one of the use cases. But I think it's going to be a little bit longer before, especially with the focus on what we've gone through with not just chads and voting machines, but the perceived or actual influence from outside actors on our voting system. It's probably going to be a little bit of time, but I think it's a valid use case that people are trying to do. So that's the best answer I have. Is it is under? I know 2 companies that are trying to do it, but I don't know any municipality that has yet adopted it. And I think it probably takes some legislature and stuff to get through for that to happen.
Could you briefly outline just how there are subsidiary companies that could be potentially aiding the growth of this new finance way of addressing whatever sort of economic issues? I mean, I think the gentleman over there sort of briefly highlighted insurance as being one of elements in which could be a subsidiary or a sort of additional company that can be created as a consequence of blockchain. And lastly, I suppose it's a 2-part question, how is 5G or the growth of 5G actually would impact this technology and method of finance?
Okay, I think on the first question, which if I'll kind of paraphrase, is what could a subsidiary or a smaller company do or participate in that would kind of support this movement? Is that in general what you're saying? Or
Yes, or what is essentially the trends and outlines?
the what line?
Trends and outlines.
Okay, one of them that actually is a real challenge is actually getting dollars back and forth from both governments and aid agencies kind of globally, along with just the general remittance. If you look at like Western Union and all the stuff that they went through, 5 or 10 years ago, I think it was the actual cost of getting an aid dollar to an organization or a end user is something like 18 or 20% by the time that USAID or another organization gets the money across the border and it's done. So, the actual direct cash into a program manager's pocket in Africa or somewhere else does cost money. So one of the use cases is if we look at the total cross-border payments for aid or nonprofit, that would be a great use case if someone could and not just the banking side of it, but the actual nonprofit aid side would be an amazing one. And you could calculate the total, aid that goes across any border, and take, if I can improve that by 3% on 20, and I'll split the difference with you, right? I'll get 1.5 and you get 1.5. That's a big number. So that's one of the things that I'd be looking at. And then what was your second question again?
So, and how is perhaps the rise of 5G?
Oh, 5G. Okay. So part of this technology does require, our mining equipment requires kind of internet connections and that, but it's not necessarily limited by broadband or that type of technology. 5G and those networks, I think, are going to be a little bit more, to get technical, on the application side, where you've got a lot of heavy-duty applications that are running that are maybe requiring a lot of data pulls. So you have a device or something where you've got a lot transacting back and forth and eventually they will, but the packets of information that have to do with transactions and things kind of going back and forth are not huge right now. They could grow, so I don't have a great answer on what 5G might do if you could combine it with a blockchain application. But I would not be focusing on 5G as much as trying to find a business model or a revenue generating model of something where a verification system would be valuable. And then start to figure out what the regulators are going to do about it and see if you can find a spot, because that will help you get access to capital, is solving that. And you can look globally at that. But I haven't thought much about 5G, so I'll dig into that a little more.
Don't you almost have to keep the cryptocurrency within the cloud? Because at this point, I've heard horror stories when people have tried to cash out their Bitcoin because it's considered an asset by IRS.
Yeah.
And with the fluctuation of it, many people have been really hit with taxes.
Yeah, well, Coinbase originally was, I think, subpoenaed by IRS or read a request to hand over all their records. And they fought back pretty hard on transaction size and the value of the holders and limited that amount in. So you're already seeing, just from your second part, that not the cloud, but the kind of IRS and enforcement agencies, who they really want to know and if you have something, and regardless of whether you sold a tomato for $100 or a Bitcoin, that's reportable income, right? We've got an expert right here two experts there that can talk about that sitting right beside you. And so, yeah, there are a lot of people right now that haven't reported and need to. And the question is going to be, one, what bandwidth do our enforcement agencies have at that, and what is kind of the um, timeline that they have for that? What's the kind of what's the phrase for the timeline of enforcing a law? I'm just drawing a complete blank here. Statute of limitations on something like that, right? They're going to go back 4 years and say, "Oh, we finally got your records about Bitcoin, and you owe us $1 million because you cashed out." And you're like, "Well, my Bitcoin's worth like $40 right now." I'm like, I don't. It's like AMT, right? They're like, "I don't care. It happened back then." So the cloud is effectively the network is a cloud. You can put your private key or something if you want to, like in the cloud, but the idea that you're going to put your digital asset in the cloud is almost like putting it into a digital wallet. And you could also do a cold storage, but now we're talking about the keys where you actually have a device that holds it that is separate from any type of connection. So if someone does hack, you've got to have that thing, right? And so you better have like keys or someone specific there to know how to open and deal with it, so we don't deal with this kind of example where the guy's laptop is holding like $180 million of Bitcoin. So I don't know if that answers your question, but
Well, I guess what we need is to actually have a constitution change, because as it is now, there's no Congress that can make money.
well, I think so. That's now we're getting pretty heady. I like that. So if you're advocating a constitutional change, oh, you're not. Okay.
In order for that to work, to actually be used for taxes and stuff, the government has to be willing to accept it as taxes.
Well, yeah, or accepted as payment, right? Treat it as a currency versus just a property. And so we're not there yet.
It has to be issued by the government,
Um,
unless you change the constitution.
okay. But let's talk about that afterwards. I'd like to have that conversation.
So this is a curiosity, I guess.
Yes.
You touched a little bit on the energy that it takes to operate Bitcoin.
Yes.
And while I was back here doing things, I read that Visa uses about the same amount of 50,000 U.S. households for every 350 million transactions, whereas Bitcoin in total uses the amount of energy for 2.5 million U.S. households for every 350 transactions.
Right.
That seems disastrous for the environment, especially
Yes.
in the context of recent elucidations regarding how limited our time is to improve or at least plateau the crisis of global climate change.
Yes.
At the same time, it seems like Bitcoin requires a relatively upwardly mobile user to eventually extract value from these layered processes. So with that said, the questions are, what does the future of Bitcoin look like for working class people in terms of access, people who don't have access to technology or large servers, things like that? And additionally, what does the future of the environment look like for those same working class people if they don't have access to things like that?
Great question. Love some good data behind it. That's what I like, right? So let me address two issues, right? So the first one was you talked about the power, did a comparison with Visa on what does it take to support just transactions. And then if that results in a negative effect on climate change, then secondarily, what kind of access does just the everyday man have who doesn't have access to all that, right? What is it? What's the value there to someone who's not super technology savvy or is in an area that just doesn't have much technology, right? And so my answer to the first one is a little bit of the analogy of I said kind of getting out of our orbit and getting up to the moon or somewhere else. Right now, there's a lot of work being done to try and reduce the amount of energy it takes to support these networks. And being a miner, right, where what we're doing is, we went out to the state of Washington and found a group that on the Grand Coulee Dam that has excess hydropower. So this is power that's not being consumed. It's just kind of going down, right? So if we use it, we can do it. And the outcome of us signing up and investing in that area was that the public utility district saw us and others kind of coming in to do this and decided to issue a tax and almost a fine on companies like ours to be able to do that with the same premise, which is, one, it's bad for the environment, but two, we've got to protect our power for our own users to grow this county. Now, they were already supporting Facebook and Google data centers in the same county, and my argument to them was, it's not going to be long before those same data servers and stuff you have over there at the Googles is going to be doing their own mining on something. So are you going to go in there to them and fine or tax them for the power that they're using when you come after us? That's a separate issue, which is kind of how municipalities address it. But the overall issue is now the reason it uses a lot of power is that you're using something called an ASIC chip, a chip that's just designed in these computers to do one thing, and that's go through this algorithm and verify this transaction. And it is not very efficient, right? It doesn't scale really well. But in the comparison that Visa had, what I would say is that at some point, I'm not just talking about transactions in this system as we understand it. I'd like to eliminate the system of accounting. I'd like to see what's eliminated is the idea of escrow. So now what I want to compare is not just transactions per kilowatt, but I want to compare the labor hours, the real estate cost of the buildings and heating them, the regulatory cost to create laws to regulate the escrow industry, and just pick one of those and say, okay, what is the total output of energy or level of effort required for this industry if something digital could replace it? I'm not advocating that, but I'm saying one, let's take it up a scale and now say, it's the same in analog for robotics, right? We're looking at what is the cost of a human picking a strawberry? Or is it, and so the total cost of a human picking a strawberry versus a robot picking a strawberry. There are ways of evaluating, you can be an actuator and go through all these kind of things, but you could look at it that way. And I think that's how some of the biggest investors are kind of looking at this, to answer your question, which is the short term is that we've got this heavy energy load, but it's not going to be there forever. The real picture is industries are going to get displaced. What is the total cost of that industry, and how can I displace it if I look at housing, buildings, electricity, regulators, laborers, and people working paper in a deed book? I don't know if that answers. That's kind of my quick answer on that. Cool.
With some of the European countries have got themselves to the point where transactions are more than 30% on credit cards. It's easy, it's quick, it's not half as complicated as all you put forward here. And I just wondered where does this live in the future? Are the credit companies?
So I can piggyback on his. I'll piggyback my answer on his to yours too.
Okay, and the other second half is you talked about transferring money between one currency and another. There are several apps available today online which will do this for 3% already without going through the Bitcoin situation. And
Yes.
I just feel it's being somehow likely to be superseded by other technologies.
When you say it in your sentence, you feel it is likely to be superseded. It being cryptocurrency and technology?
Bitcoin itself.
Bitcoin itself.
Yes.
Okay.
And not maybe other forms of bit chain reaction things are a different idea because they they handle information and such. But that's I'm talking about currency itself.
Okay. So on the first part of the question, which is kind of like it's hard to use and it's not easy, right? And how do people kind of figure it out? Right now when you get on to an app and you do something, the internet is behind it, but you're not getting like a TCP verification. You're not getting a packet of what's going on. You don't see that you might occasionally see an error for 404 where your page is lost or something. There's all these errors that have to do with the way that the internet and the web works. But for the most part, you don't see that much anymore. You just get on, you do something. If it doesn't work, you go to the help center. So you as a consumer are not seeing all the things that have happened, but 10 or 15 years ago, you saw a lot of that stuff. We had a piece of software in a company that I worked at, and when you did a certain function, we got an error code that said, error 69, call Gennady. And this made out to production. So we had people from Merck calling up our company saying, hey, can I please talk to Gennady? I'm like, what do you mean? He's like, well, no, I got an error here that says call Gennady. It was an internal error code that we had for something major that was supposed to happen, and he was our CTO. So if that happened, something bad was going on. So now my answer is, and to your answer too in the back, it will get to the point where you don't need to know. You'll just know that, hey, I've got a Charlie Kiser coin and I want to trade it with your coin, or I have a blank unit and I'll trade it. It'll be more seamless and frictionless. And if you brought up currency, like trading currencies, right? People don't realize the actual currency market is like 13 times the GDP of every country in the world right now. The actual trading of currencies back and forth. So the whole idea of just picking a currency and looking at those market fluctuations is an industry in itself. So I don't know if Bitcoin's going to be the one that makes it through. It just happens to be the first one right now, and if we get a little bit deeper into it, there's actually two forms of Bitcoin. There's the original Bitcoin and the current Bitcoin Cash, and this where they did a fork, And that means that one blockchain went this way, and some original people wanted to stay with an original scaling model that had some different limitations. So you see a little bit of that, and so there's some arguments as to which one's going to survive. And so that may be for part 2 in a year if you invite me back, or we'll do something. But that I do think it will be something. But your point about usability in the user interface, it's still pretty clunky. It's not great to do right now. And that's going to take a while till it's more frictionless. And then the idea that it won't be a currency and it will just use lira or dollars or something. I think there's enough global instability and enough desire to use this even as a state-run cryptocurrency. And what you'll see then are something I didn't touch on, which is a private blockchain. And that is a blockchain that is managed by a group, organization, country, NATO or something. And what I foresee are the evolution of similar types of pact-based blockchains that may be backed by a currency that is traded by a certain group that represents something like the euro or something else for those who agree to the standard and provide a network, agree to the reward system, and have a governance that meets general, like, what is the, there's a, instead of the NATO treaty for nuclear war, we'll have the NATO treaty for cryptocurrency exchange. So those are some of the things that may cause that. And as a user in Africa or Nicaragua or somewhere, you won't be subject to those. You're just going to be like, who are you? Send it here. I'll pay here. And Visa and those people are getting into it as well. They're not going to, the whole payment processing industry is looking at this because it's very expensive. If you run a business, who here owns their own business and deals with payment processors and pays, there you go. It's expensive, right? You pay your fees to MasterCard or Visa for just to get your money. And that's just because there's not very good technology for you to pay here or at Starbucks or somewhere else. So these digital currencies initially were perceived as a quick way to, and our business model was like, hey, Bitcoin's a 0.5% remittance fee, and Visa was like 2.5 or 3, depending if you're the merchant bank or who you are. And so that you're not going to see that in the background as a user. The businesses will see that, and that's how they'll drive value to maybe start using these things. So that's my long answer to your question.
Thank you all for coming out tonight. We have a wonderful reception in the lobby, and hope you will join us there, and you can ask Charlie
I'll
some
stay
more
here.
questions.
I'll be around. You got my access information. I'll be as long as you want. I'm happy to talk about it. And great questions. Thank you so much. Thank you, Karen, for inviting me. Yeah. Oh, it was so much fun. That was so much fun.